This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. A quick reminder, my newest book, Trend Following: How to Make a Fortune in Up, Down, and Black Swan Markets. Available, finally, in audiobook format. 34 hours. You can literally drive across America and listen to one thing. Now, you might go crazy doing that, but still, the point is, it's out, finally. Easily found at Amazon, Audible, all of the usual suspects. My guest today is Steve Burns. Steve is an author, a trading author. Specifically, Steve has worked very hard over the years to help brand new traders understand some of the subjects that are near and dear to my heart. And if you ever wanted to see someone in action, start from scratch, start from nothing, become an author, have 70,000 plus Twitter followers, and make a dent in the consciousness, make a dent in the trading consciousness, Steve Burns has done a great job. I hope you enjoy this conversation. I had a call recently with a very, very, very well-known finance professor. He happens to share the belief that markets are not efficient. I think it's a belief that you happen to share. I know I share it. We had this great conversation, kind of going down all these different directions. And I wasn't asking him a prediction question, and he wasn't about to give one. That's not what he does. But I was asking him, given that we're, let's see, March of 2009, and we're now, the middle of 2017. We've had a long U.S. equities bull. And I kind of said, hey, where are you imagining things? And he told a story, and he talked about 2005 and looking at various metrics in fixed income, and that he wasn't able to predict 07 and 08, the timing, but he could see the imbalances building up. And he was pointing out, without giving away too much now, that he can see the imbalances building up. He pointed primarily to low volatility. It's a really interesting environment right now for almost a generation of people. I mean, almost a decade of people being first exposed to the market, and all they see is straight up. Why do all the Steve Burns, Mike Coveil ideas and techniques matter when the market only goes straight up and will always go straight up?
Yeah, it keeps going straight up until it don't. And when it don't, that's when you need a plan. I think I learned these lessons when I thought I was a genius in March of 2000 and had an amazing run. And there's a generation of people now that don't even remember the 2008 or the 2000. I mean, or the 1929 or the 70s. So it's a re-education process that there is gravity in the markets.
Of course, there's a lot of people in your world, your life, that have that grounding. I can see that. I know many of them. But given that you are exposing new traders to various just trading lore, trading mantras that are like always so key, the having the plan in advance, the entry, the exit, the position sizing, edge. But what are you seeing on the front lines right now? Because, you are on the front lines with Twitter. You've grown from 0 to, you're plus 70,000 followers on Twitter. What are you seeing on the front lines right now? Are you seeing what I'm imagining, which is, okay, there's the people that get it like you, and they have all the plan figured out. But a lot of new traders, I'm guessing right now, don't have anything figured out other than the excitement of something going up.
Yeah, the Bitcoin mania has gotten pretty wild right now, even though the wild volatility in that mostly unregulated market, it's like they don't understand the importance of stop losses anymore. They don't understand the importance of an exit strategy. They don't understand that a lot of what they have is paper profits. And if they don't have a strategy to exit with those paper profits, the paper profits will go up in fire. it's just a lot of lulled into stay bullish no matter what. It's interesting. There's another camp that's the perma bears who have been bearish since 2010 and who keep calling for a crash and being wrong for 8-9 years now, and they keep calling for it and have actually missed the profits because they were unable to go with the trend. So we have the perma bulls and the perma bears, which both in the end could end badly for them.
Speak to the cryptocurrencies. This is a really fascinating subject. I mean, I can't think of a better way to trade the cryptocurrencies than some type of trend trading approach. In fact, I can't think of any other way to do it. I mean, look, the reality is what fundamentals are there to know about cryptocurrencies? I mean, this is the Wild West if there ever was the Wild West.
Yeah, they're simple. You'd have to have a filtering trend model, probably a moving average that you look at for the history of the Bitcoin and seeing how it's moved, and you'd have to go with that. And probably as simple as a moving average. If the trend's up, you stay long until the trend's down. You have a way to exit with your profits, and you exit when it's time. And there's so many people, like you're saying, that do not have a strategy for entries and exits right now. So they're sitting here on profits, but will they ever bank them long term is going to be the question.
There's no way to get to all-time highs in U.S. stocks unless 99% of people are long only. And I keep asking people just randomly in conversation that I know are long only, what's the plan? You know, what, and there's no more imagination that October of 2008 could ever happen again. It's completely gone.
Yeah, it's now in this we're in the euphoric stage where it can't go down. And you look at worldwide, I mean, the U.S. equity markets have come back, but, you know, the indexes have changed. The Dow that's going up now, there's a lot of things missing in the 2008 Dow that were removed. And a lot of it's survivor bias when they're looking at just indexes. Like, there are still stocks that can go to zero. There's still people that got hurt in the Snapchats and the GoPros and all the little the stocks that came out, and the danger is still there. And just because somebody happens to be in Bitcoin or happens to be in an index right now, there's still a lot of pain out there in other areas, and they will eventually be paying back in those perma bull markets. And it's just a strategy. It's like they have no exit strategy. I mean, there's a lot of internet millionaires that had $1 million on paper during the bubble that walked away with less than six figures.
Yeah, it's quite amazing. You know, I was thinking about something too that I often hear from people that will say, hey, something like trend following doesn't work well with surprise markets. You know, if you're trading XYZ market, you can't really be ready for the surprise. And the larger issue there isn't really necessarily trend following. The larger issue is, how in the world do you think, not you, Steve, but how in the world does someone out there think they can trade one market alone and be successful? If you're going to trade one market alone, then my gosh, just be a passive S&P indexer and then walk away. But I mean, if you're going to be a trader and trade one market alone, I don't know how the math of that works. I don't know how diversification, not having any diversification works. I don't get that one.
Yeah, but not having diversification is one of the keys. Even diversification system and diversification of markets. And you're not going to if you just have one system in one market, you're at the mercy of that, and you can underperform for years on end. It's like you have to have enough different markets. Even within indexes, you need to have small caps, large caps, tech, in different indexes alone, much less, trying to trade just one market, like one commodity. It's like you have to have, I think part of the managed futures success is they're exposed to enough that when there is an outsized trend, they will be there to catch it. But if they're not exposed to enough markets, then they're looking for to have a less opportunity to catch that trend. So like you said, you have to, before you do any, you have to be able to have a system that beats the S&P 500, or you might as well just be an index investor. Like you said, I agree with that completely. And you can beat it by catching the trends. You can beat it by having more leverage. You can by diversification across different markets and currencies and commodities, and give yourself more opportunities. But you're right. If you're just sitting in one market, you might as well be an indexer.
And there's a great line that I caught on your Twitter feed. And this gets before even get to the idea of trading, because so much of trading is psychology. So much of trading is mindset. And you've got this quote that I've never seen before from Warren Buffett. When my first wife lost her credit card, I made no attempt to get it back because the thief was spending less than her. I love that. I mean, and how the heck does anyone even get into the markets if they don't understand what Buffett is saying right there. And the vast majority of people that get into the markets are completely violating Buffett's credit card rule before they even start trading. It's a disaster on top of a disaster.
Yeah, that just sounds like a Buffettism, doesn't it?
Yeah, but it's true though. I mean, really, even before you could give somebody good advice on entries, exits, position sizing, diversification, before you could even get there, if people are going down the rabbit hole of life with a credit card maxed out, they've got no chance.
Yeah. I thought that the lifestyle, if they're levered up to their eyeballs in a mortgage and they have 2 new car payments and they're commuting to work and they're spending a fortune on that, and then they have a lavish lifestyle and a life of leisure and just overspending, you're right. I've always thought, like, you don't have a prayer. I mean, you're not even disciplined in your personal life. How are you going to be disciplined in the markets?
And speak to that discipline, though, because, I mean, break it down. When you say you don't have discipline with your credit card, how could you have discipline in the markets? I mean, what's necessarily wrong with having your credit card maxed out if you can make the payments? What's wrong with that?
I think it's like the improper use of leverage and the lack of discipline. You know, if they're going to, if they don't have the discipline of their own spending within the means they don't have the discipline for trading within what they can trade, you know, and they don't have the self-control not to spend, how are they going to have the self-control to follow their trading plan? I think you know, in the New Trader, Rich Trader book, at the very end, I talked about, you know, how the trading principles apply to life itself. I think that's very true. Like, you almost have to have a personal successful life first, then you can be a trader. I think it bleeds together, like you're saying.
I always look at some of the great lines that I've been able to put in some of my books, and I always just look at them as lifelines. I mean, they kind of can be used for trading too, and maybe they were designed for trading, but there's so much about life. But I also notice so many new traders, even established traders, will see those gems from the likes of a Larry Hite or a David Harding or an Ed Seykota, and they kind of poo-poo them. They kind of say, but they kind of miss the point. And instead of like getting that Larry Hite's actually telling you in that one sentence how it's done, they then throw a chart up on Twitter with 1 million buys and sells and squiggly lines everywhere, and the page is cut up like with a magic marker, and they think that is the solution.
You are exactly right. The complexity. It's so funny when the work you've done with the trend followers, seeing how they actually work, and the principles that underlie their systems are simple in concept. And it's so funny that people on the social media world, they think it's complexity. They think it's complexity as a solution, when in reality it's simplicity, and you have the right principles, and you build your system around that. You don't start with, like you said, I don't even understand what could be an edge in these charts with 100 squiggly lines and 10 indicators. It makes no sense.
Clearly, it's not about an edge. They just want to prove to you they're smart.
It's funny, though. People that know what they're doing, they prove the opposite. Larry Hite would never go and have a chart with 100 squiggly lines on it, or Ed Seykota would never do that. It's not how they operate.
I can think of, if you put the squiggly line chart up in front of an Ed Seykota or a Tom Basso or a Larry Hite, I kind of know roughly what all three would say, but Larry would say it the most colorful way. Larry would say it in a way that would have some real color to it and make the person feel really, really tiny.
Was there one where Ed Seykota, he went to one of his first conferences or seminars, and somebody asked him, where is gold going? And all he said was, I have no idea. He said, well, where do you think gold will be in a month? I have no idea. And that's all he answered with.
He said something like it's shiny, it's yellow. Yeah. But then I'm sure, and I think I was told that story for the first time by Charles Faulkner, and Charles said people like got up and left the room and were calling him crazy and stuff like that.
Yeah, have no idea. And I also find funny, it almost seems like on the social media that a lot of the people are ignorant of their own ignorance, and they show their own ignorance and stuff that they do, and then they almost mock people that go on and have what really works and think that's silly. Those are silly trading quotes, when really they hold the keys. I mean, they're not, the trading quotes aren't, give you, okay, here's a trading system, but it directs you to where you find the edge in the right trading system. But they have no interest in that, as like you said, they go through 100 charts.
Steve, speak to social media for a moment. Speak to Twitter. I think that's probably your biggest platform. Is it your biggest platform, Twitter?
Yes. Yeah, it is by far the biggest platform. Interestingly, Instagram is growing dramatically right now. It's a different type of platform, but Twitter by far is just an amazing communication platform.
when you're on Twitter, and you're on a lot more than me, so you have a much better handle, a much better pulse, is it age dependent? Meaning, can you feel when you're dealing with so many different traders and so many different ideas, can you feel age and inexperience versus experience? I mean, for example, if anybody reads Nassim Taleb's Twitter feed, you're just like, you instantly know in 140 characters or less how smart the guy is and how much experience he has. But speak to me about what you see in terms of trends and how people are using Twitter right now for good and bad.
Yeah, it's so much on Twitter. It's just like with stuff. It's just they focus on the wrong thing. Focus on the what's it been 7 years? I think I've broken my own following from asking me to predict, asking me to where something going. It's like I have no idea. I have signals and entry plans on what I'm going to do based on what the trend does, but I have no idea, and nobody else does either. I mean, the belief in a crystal ball is still prevalent even after all these years on social media, and the obsessive sharing of endless amounts of charts. When how can anybody even have a position in 100 different stocks? Why would you post that many charts and not focusing on the edge, focusing on the risk management, focusing on the trading system? There's still just not a focus on the right things. It's probably 95% of it is almost the wrong things on Twitter. So I try to be the filter where I try to send out the things that people should be focusing on. And it's really it's shocking because most of the new traders, when they enter, the first thing they're shocked at is the lack of predictions and forecasts. And it shocks a lot of them.
You know, personality-wise, I think you're a lot nicer guy than I am. So I'm curious, though, in your world, and I've seen how you have unfolded information over the years. Instead of necessarily trying to be controversial, you seem to be very consistent in your messaging. Do you have people, though? That come at you and really want to argue and debate with your perspective, or do most people that argue and debate with you just kind of go away and they really just move on to something else?
Yeah, I've had a few. I mean, as long as it's a constructive, like I guess you do the same thing on Facebook. You know, if it's a constructive conversation about what does and doesn't work, I'm happy to have a conversation to both learn from each other, even maybe. But when it gets to be a personal attack or nasty or just ignorant, I don't waste my time and energy on it. But they're muted. The thing for trolls is to mute them on Twitter after you've given reasonable responses and move on with your life. You can tell by the new people, too, that they didn't go through 2008. They didn't go through 2000, so they're naive to what does and doesn't work. And I think there's another group of people that are bitter because they failed at trading. They lost a lot of money, and they're just bitter, and they just love to go on Twitter and lash out at other people on Twitter that are traders. I think it makes them feel better when they just lash out at you. It almost tells them you more about themselves than about you when they lash out negatively and for no reason. And what they're saying even makes no sense.
One of the things that I love for Twitter, though, is to quickly see those pieces of insight where I might not have phrased something that way or had not thought of it that way. You had a tweet recently that I caught, a formula from Mark Minervini, which I just thought was so simplistic, so straightforward. Number one, admit that you suck. Number two, believe you can be great. Number three, find someone great. Number four, shut up and listen. Just love that. That is so spot on. That's life.
And that's from a guy who did it. I mean, he won investing championships and successfully traded trends for 30 years. I mean, and that's what he says his secret is. I mean, but it's like, you have to unpack it. You have to do the work. I mean, that's the thing is people see that and they don't get the value, but that's what you have to do the work on.
Look at step one. Admit you suck. Admit you suck. Think about that. Admit you suck. I mean, there's got to be a baseline, right? And I can think of my baseline. I can think back to when I could admit to myself that I sucked. Well, that would be when I never had heard of trend following. I had to have sucked at that moment in time.
Yeah, when you realize you can't predict, you can't beat the market all by yourself, you can't make decisions in live time that's going to be greater than the market itself. And I guess that's the first step is you're not going to be able to do it from your own ego. It's not going to happen.
We might have talked about that step two that Mark puts on there. And I know Mark is actually a fan of him as well. And I am. With that step two from Mark, believe you can be great. I trace that back for myself to Anthony Robbins, his book, Unlimited Power. Really, people might think that's crazy and hokey or whatever. But the reality is when I was going through that book, That was the light bulb moment that I had never seen in grad school, college, undergrad. I mean, high school, whatever. I had never seen somebody kind of map out the perspective that you could, if you wanted to be XYZ, just go be it, versus most of the entire schooling system, the growth system of a young person into adulthood is all based on shut up and follow the rules and don't ask a question.
It's odd that you mentioned that, because that was also the pivotal book that I read, because, I saw his infomercial, thought, well, this is, wonder what this guy's all about. Tony Robbins. And I read his book, and I read it 2 more times when I was 18, 19, 20. And the same thing with you. That really changed my thinking, where there's a vast amount of opportunities in the world. You don't have to go down the normal path of the world. You can be and do what you want to be and do, and not fall into what society wants you to do. And if that's one thing, early on, I thought, if I see somebody do something, then I can do it. If somebody does something, anybody can do it. They're not, the most special thing they have is a work ethic and drive and passion to go down the right path. So I share those sentiments completely.
It's funny you say it like that, because I still see people to this day, they'll come out and they'll say, oh no, Coveil, you got it all wrong about the turtles. They were all brilliant to begin with, and Dennis picked the most brilliant people, and so therefore I can't be as successful as somebody else because they were picked and they were super successful already, and every excuse under the sun, even though Richard Dennis, Jerry Parker, etc. says, oh no, that's not true. Look, I'm not taking anything away from very smart people, worked hard, but too many excuses.
Yeah, it's like they want to find that excuse for them not to do it. Like they feel more comfortable saying, well, I couldn't really do that because there's somebody special and magical about them. Even Ed Secoda, was he like using punch cards to back test trading systems on a computer? Was it MIT, in the 60s, putting in a massive amount of hours to back test systems? Of course he was going to be nobody else was doing that. It's like Steve Jobs building a personal computer when nobody was doing that. Bill Gates was working on software in high school when nobody knew what software was. Of course, if they do that and go down thousands of hours of work on that, they're going to be successful. And people don't really get that formula. They just, oh, he was lucky, or he did this, or I could never do that, or somebody. It's like they want to push the responsibility onto somebody else.
Look, of course, some of these folks, the Bill Dunns, the Ed Secodas, the David Hardings, they have worked very hard. They have gone down high-level schooling. But you can find just as many people that didn't go that direction and have become successful as trading. As one side note, though, just to give people some color, I don't think I've talked about this on the podcast before, but years ago when I met Secoda for the first time, I did some searching, and this would have been in the early 2000s. And I came across, now Ed is a very down-to-earth and humble guy. He doesn't really put out there, and not in a really high level way. I mean, he's got some papers out there that are pretty detailed, but he doesn't really expose all that he knows, right? And so I did some searching in the early 2000s, and he must have had at the time, I'm not going to give too many details here, but there was a child in his life, and this child was very accomplished in math, right? And must have been a young teenager, right? And I found this paper of Ed's child on the internet, and it was like a math proof. And I think it literally went on for 20 pages or something. And it just struck me. It was like, okay, this is telling me not necessarily a lot about the offspring of Ed, but it's telling me a lot about Ed. It was an amazing, I wish I would have saved that. It was an amazing little nugget to see, because I sure as heck, when I was a teenager, was not doing 20-page math proofs.
Yeah, I think early on I had a passion and interest in capitalism and how capital compounded and how the stock market worked. I did have it early on, but not to the drive and work ethic of a lot of the other people, or like you're talking about with Ed's child.
Here's another great line that I pulled from your Twitter feed that I just love. Sometimes you want to buy a dip and there is no dip. Sometimes you buy a breakout and it fails. It doesn't matter. Keep going. Now, the way that I read that, you tell me if I'm wrong. The way that I read that, sometimes you want to buy a dip and there is no dip. Okay. Sometimes you buy a breakout and it fails. It doesn't matter. Keep going. Well, the second part's easy. Sometimes you buy a breakout and it fails. It doesn't matter. Keep going. Well, that's true 100% all the time. But I think some people, this is a really cleverly worded line. I'm not sure how much you've thought about it, but sometimes you want to buy a dip and there is no dip. That's kind of saying maybe you shouldn't buy the dips.
Yep. Yep. Sometimes the breakout was the signal and there is no dip. You're exactly right.
I mean, I love the way that's worded though. It's very clever because it kind of forces the people that might be thinking that the dip buying strategy is the right direction to really kind of, hold on, what is he saying there? Sometimes I want to buy the dip, but there is no dip. Well, what if sometimes there's never a dip? Then what happens then? Right?
Yeah, absolutely. I mean, I have to have systems that buy the breakout because like there may be no dip. I have to have the different systems that have to be diversified. If you want to buy a dip in an uptrend, and that's a valid system, and you back tested it, that's one system. But at the same time, you have to have a system that buys the breakout because there may be no dip. So you have to have multiple entry areas because like you said, you may not get a chance.
Yeah, I was actually, I completely concur with your point there, but the way that it's written also too, I was almost taking from it a little bit that sometimes you want to buy a dip, but there is no dip, meaning maybe you might be thinking about other strategies, even if somebody out there has a dip buying strategy. It's very interesting how that one is worded. Hey, okay, here's one more that I really like. Sometimes the best trade is to add to the one that you are already on. Is it sometimes or is it all times?
Hey, sometimes. Sometimes it's better just to add to what you already have than to find a new entry in the right trend. Like in the 90s, it was just add to tech. If you're in tech and you're writing it, just add to tech. In the 2008, it might have been to add to your short. I mean, sometimes you're pyramiding into a position as a trend. Sometimes there's no need to look for other trades. Sometimes you're in the trend and you're just riding it.
And that thought process is the basis for all great success. And you know what? They don't tell us in high school, oh, hey, by the way, you're going to strike out all the time, but you've got to take the strikeouts because there's no other way to get to the home run. If you're not taking the strikeouts, you don't get to the home run. If you get a home run and you never took a strikeout, then you were just bloody lucky. That's like winning the lottery. Yeah, somebody's going to win the lottery, but is that a strategy? No.
I believe Babe Ruth had the record for strikeouts and the record for home runs at one time.
Yeah, he had the record.
Yeah, he had the record for both. He had the record for both. Just like some of the best trend followers have bigger drawdowns, but they also have the biggest long-term returns as well.
Look at Major League Baseball right now today. There is record high home runs and record high strikeouts across the board. All players.
Yeah, in most trading systems that you'll see that usually the drawdown is at least 50% correlated with the return. If you want to shoot for a 50% return, you're likely going to have a 25% drawdown. If you want a 20% return, you're probably going to have about a 10% drawdown. It's correlated. The risk is correlated with the return in so many ways.
And so many people, they see those strikeouts instead of accepting the strikeouts. Instead of saying, these strikeouts are the cost of doing business, I must accept the strikeouts. They are a part of my life. I might be able to minimize them some. I might be able to reduce them. I'm telling you, for 20 years now, I've seen people approach me, and their first thought is, let me eliminate all whipsaws. Let me eliminate all strikeouts. And you're just like, what are you left with if you do that?
What did Itsukoda say? To eliminate whipsaws, simply quit trading.
Yeah. I actually had a conversation with a fellow recently. It was very nice, and it was a thread that went on for a couple of weeks. And he started saying, well, I'm really working on the whipsaws. And I would say, okay, well, what are you trying to do? Well, I'm trying to reduce them. And I'm like, well, what are you trying to reduce them to? Because I need to get them down a lot. And I'm like, are you trying to eliminate them? He's like, well, yeah, if I can. And I was just like, hold on, let's take a step back. And of course, the way that I took a step back with him, and he probably thought I was crazy, is I gave him Ed Sekoda's whipsaw video song.
Oh, that's highly educational music video by Ed Sekoda.
Yeah, but how many people probably watch that and just say, oh, kind of some mercurial guy, and he's just having fun. He's not that serious. How many people miss the point, huh?
Yeah, he's like the Yoda of the traders. It's like Jeff Bezos said when they were making fun of Jeff Bezos because his Fire phone for Amazon didn't really catch on, and they said your Amazon phone was a failure. And Jeff Bezos said, he said, "Well, I'm gonna have way bigger failures than that. Just wait."
I mean, yeah, you got to try. You got to try. You have to swing the bat. Because you just don't know. You can't control the damn outcome.
And that's the biggest thing that you have to see in your coaching and your followers is that they worry so much about winning percentage and not about the magnitude of wins and the losses. They don't focus on the fact, because they don't understand the reality is you may have a trend following system that loses half the time, but the half the time it wins are far bigger than the losses, and that's why it's profitable.
A lot of that is rooted in a chart that I, again, pulled off your Twitter feed. Your Twitter feed has got some really cool stuff. I give you a lot of credit. You do a lot of work to find cool stuff. So I'm looking at something right now. I'm going to kind of read through it really quickly so people have a feel. But basically, it's a market chart, and it goes from left to right. It basically goes up, from around 250 to 1,000, and then it drops from 1,000 to roughly back to, 50 or something. So basically it's a ride up and a ride down. It's any one of these big charts that we've seen in the last 20 years. But I'm going to read these really quick. I like the feeling that is expressed at each point along the chart. So starting at the beginning around 250, this is a long chart that's going up, a rising chart. Hope. It's not lost yet. I can still make it back. It gets up to about 500. It's optimism. It's finally going to go in the right direction. Around 750, belief. Trading is so easy. I should add more to my initial position. Thrill. We're approaching 1,000. Yes, I will tell my friends to buy too. At the top, euphoria. We are going to be rich. I should take a vacation. Hold on. That market peaks. It starts coming back down around 750. Anxiety. Why am I getting margin calls? Back to 500, denial. I made a great investment. We'll come back for sure. Around 300, panic. I need to get out. Everyone is selling. Anger. Trading is not for me. The market is against me. And last but not least, depression. I am such a loser. I like that.
That's a autobiography of many investors and traders.
But the chart itself, though, that up and down nature, there's nothing wrong with that chart. I mean, the chart itself is going to be fine. The question is what are you going to do along the life history of that chart? How are you going to trade that chart? What is your thought process? I mean, do you really imagine you're going to get in at the very bottom and get out at the very top? Well, if you're thinking that from the beginning, you're already screwed.
And there's so many simple tools that trend followers use. So many simple, even something as simple as a moving average of prices. I mean, for the people that, especially the normal buy and hold investors that believe just hold it and write it up, write it down, it all work out 10, 20 years. If they simply had a 200-day moving average or a 250-day moving average and said, okay, the market's in a bear market, it's 2008, I will get back in when price crosses over the 200-day moving average. And it may, that may be the break, and it may run or it may not, but that's how I'm going to try to get in. If it goes back under, I'll get back out and wait. So they have a way to catch that. And then after the bull market runs, like now, you could think, okay, when am I going to lock in these profits? Might be back at the 200-day when the 200 days lost. I mean, just to have any strategy, and amazingly backtesting these strategies, a lot of these strategies beat buy and hold investing. And how people could just hold on through the whole thing I just cannot understand that. I think it mainly to benefit the mutual fund companies and the financial advisors that simply have an exit strategy to lock in profits.
Well, those guys get a lot of fees for their work.
And our mutual fund managers getting paid to not even beat the index.
Steve, given to what you just laid out, though, let's take a little side jump off for a second, a side tangent to books, specifically trading books. Now, not to promote myself, because you've already said some nice things about my books. In fact, you said something very nice that was actually printed in my newest edition of Trend Following that just came out here in 2017. So beyond, because again, you've said some nice things already, but beyond my stuff, where do you see yourself? Like when you reach for and you want to look at trading books out there that inspire you still to this day, that are just timeless classics that give that nitty gritty. Because I mean, look, somebody can listen to us, okay, but sometimes, sitting down with a couple hundred pages in a quiet room really offers a lot too. Give some book titles that have really inspired you over the time.
Okay. Yeah. I've actually read, at this point, I've probably read 400 and something trading books alone. I'd have to say the best that I've read was, we already talked about yours, of course, which I think you do a great job where you actually go to the trend followers, the masters themselves, and you get it directly from them. I think that's what separates you. But I think, like you do as well, Jack Swager has done an amazing job talking to the hedge fund wizards and the market wizards and the stock market wizards. I have to say Jack Swager's entire library, because he's not talking about his own opinions and ideas. He's going straight to the ones that made it, and from him and you, we can call amazing principles out of that and see how they made it work. Other names would be Alexander Elder's Trading for a Living and Coming to My Trading Room. He really gets into the core of you have to have the right method, you have to have the right psychology, you got to have the right risk management. I think he really covers the three biggies in his. Van Tharp does an amazing job with risk management, position sizing, the marble game. So Van Tharp's Trade Your Way to Financial Freedom. And, of course, the old classics, Reminiscences of a Stock Operator. It's amazing that was written over 100 years ago with all the principles that still tie together with trend following perfectly. I have to say, from studying Jesse Livermore, which is one of the favorites on social media, is I think his biggest weakness was his not managing his risk of ruin. I think he was like the Babe Ruth. He was going to either make $1 million or go bankrupt. And I think that was Jesse Livermore's biggest downfall. But, Reminiscence of a Stock Market Operator, and also the autobiography of Jesse Livermore, goes into detail of all the really mistakes that he made we can learn from. So those would be some of my best picks.
You know who you kind of turned me on to? I had seen the name forever. I'd seen this name, but I just thought it was I thought it was hokey, and I thought maybe it was like a W.D. Gann or something like that. I thought it was like just kind of maybe like some kind of bullshit, and but I finally, at one point in time, and what turned me on to it was this Time magazine article, I think from the 50s, and that was Nicholas Darvis. I mean, I always just thought the whole thing was made up or something like that, and then I finally got down and did the homework and dug into it. I was like, wow, what an amazing story.
Yeah, that's so funny you say that, because when I first was on Amazon, 12, 13 years ago, it kept popping up. I was going through all the trading books and learning, and it kept popping up over and over. Nicholas Darvis, how I made $2 million, over and over. And like you, I thought that sounds like a penny stock promoter. I mean, that's the most ridiculous title I've ever heard. But finally, I broke down and bought it. And like you said, it blew my mind that he was actually a pretty quantitative trend follower and was in all the right stocks at all the right times based on price action. And in that day and time, it's unheard of.
I'm looking at another one, and this sounds like straight out of Darvis's work, but I actually pulled it off your Twitter feed as well. I'm not sure if you wrote it or you just reposted it, but either way, in fact, it doesn't, these days, it's kind of like whoever does the best job of being like their own version of the Drudge Report. It doesn't really make a difference where it comes from. The idea is you're filtering, people are paying, so to speak, we're not really paying anything on Twitter, obviously, but people are paying for Steve Burns' Twitter feed. And again, they're not paying for it. It's free. But what they're paying for it is they're paying for your insight to cull and to cultivate and to narrow down what you think is the best stuff. And that's what's fun. Anyways, the one that I'm looking at right here is great. Number one, it's a list of 5. Number 1, trade to trade well, not to make money. Process versus outcome. Number 2, fiercely protect capital. Sounds like Larry Height. Number 3, act immediately without hesitation on qualified setups. Basically, take your interest signals, right? Number 4, the only thing worse than being wrong is staying wrong. Height, Sakota, Jesse Livermore right there, huh? Number 5, if confused, see rule number 2, fiercely protect capital. Bingo, right?
Yes. Yeah, that's a good summary of so many different principles tying it all together. You said it's sort of like an aggregation of trading wisdom. And I think what you said was really important. I think, we've gone from the information age into the aggregation of information age where, Google aggregates information on the internet. Facebook aggregates your personal friends and family's information. Twitter aggregates 140 characters of information around the world. Netflix aggregates entertainment information. And I think you really nailed it. We're saying, the people that are successful right now, companies, individuals, authors, the information is so plentiful now, but who can aggregate it and save your time? It's like when people if I have a simple beginner's $2.99 ebook and people go, well, you can find it on the internet. But do you want to go search the internet for 6 hours and try to filter your own information, or do you want to save that time and just spend $2.99 on an ebook that just simplifies it all and gives it right to you? I think we're in the age where people are looking to save time more than information is plentiful, but who can aggregate it the best?
Well, then it not only is it aggregation, but it's the trust that the person that's doing the aggregation knows what they're doing.
Yes.
That's the whole thing. They're really, I want to trust that this person has gone down the path. And by the way, as a side note, to add to what we were just talking about, fiercely protecting capital, a quote that I put in my newest edition in Trend Following from Mike Milken: one of the best ways to make money is not to lose money. I mean, but how many people think that that's like, Mike Coveil and Steve Burns chuckling about some little cute quote, and then somebody kind of turns off the conversation and says, those two guys are just talking about Wall Street lore, and they're not giving me the specifics. They're not giving me the details. Here's the details, man. Don't lose more than 2%. And if you're going to be really aggressive, don't lose more than 20%. Would you really need more than that? I mean, do you understand the basic math of this? What do you want me to tell you? The stop loss should be 70%. So you start with $100 and you go to 30. I mean, it's brain dead.
Yeah. You want to go, the quickest way to go broke is to go in trying to get rich quick. That's the best way to lose money, is try to get rich quick. Best way to make money is to compound capital over any time frame.
Here's the reality, and I let you build on this. The complicated part of trading is the psychology. The rules are easy.
Yeah, I think Richard Dennis said he could publish his rules to his trading in a newspaper and people wouldn't follow them. I mean, Ed Seykota could give us his entire algorithm, but could we trust it, and could we trade through drawdowns, and could we follow it? I think the psychology is just important as the systematic part of it, along with risk management. Ed Seykota says, I think the money management system that you implement your money management will determine the long-term success of your system as much as anything. It's like you have to have all three feet. You have to have the trading system. You have to have the risk management. You have to have the psychology, because you can develop the greatest trading system ever while the market's closed when you're sitting there fresh and you're a new trader. But can you execute it, and can you take the losses when you have to, and can you take the drawdown? You're right. That is going to determine whether you're successful, even more than the trading system itself, because there are plenty of trading systems that are profitable over the long term, but you got to find one you can actually follow.
You mentioned money management, and sometimes for people that gets confused. And for the longest time, like you, I've used the phrase money management. Van Tharp makes a persuasive argument to say position sizing is a better term, because money management can get confused just with the sheer act of somebody running a mutual fund. They can say, I'm a money manager. And then that kind of gets away from what you're really talking about. What you're really talking about when you say the term money management is you've got, let's say, $100,000 to your name and you're going to place a trade. Okay, what percentage of capital do you place on that trade? It's got to be a number. It's got to be a percentage of, and what is it? It's not a guessing game. There's a math issue at play here. So what's that number? And that's the start of the money management path.
I think people go backwards too. If they want to have a money management system, like first they would say, okay, I'm going to trade the Russell 2000 when the 10-day moving average crosses over the 50-day moving average. So then you go back test that for 20 years, and then you see how big the losses were in that system. And then you say, well, 10% was the biggest loss. So if I trade 10% of my account and I risk historically the 10% loss on 10% of my capital, it'll be a 1% loss. Or you do 20% of your capital and you can lose 2%, historically. I think that's where you start at, when most people just start at how they're going to make money, instead of getting their system and then building their risk management system and position sizing around the historical data. I think very few people do that.
Well, doesn't looking at historical data require work?
Yeah, that's the.
You mean you have to lift a finger? You mean I can't just go on to Twitter or Snapchat or whatever, Facebook, Instagram, and I can't just find some guy out there that I don't even know that he's a real person. Some alias out there, some doppelganger out there who I just have to trust that this guy's complicated chart is the system. Why do I have to listen to Steve Burns and all this kind of stuff, huh?
Yeah, they're not interested in position sizing, and they just, what do I buy? What do I buy? What do I buy? And when do I sell it? So many of them don't even have an exit. They just want to, what do I buy? But no position sizing, no exit strategy, no why do you buy it? No, nothing. I mean, that's the biggest thing I try to do differently, is try to focus on an actual trading system, actual position sizing, the psychology, which people get tired of hearing about after a while. But the people who've been in it, they still need to hear that to keep themselves mentally straight and to go through the tough times. And It's just that the real trading is a lot different than the pretending to trade or to make pretty charts. Making pretty charts has nothing to do with making money trading.
I want to take you back to something we talked about in the very beginning of this conversation. You brought up the cryptocurrencies. There's been some massive moves. I mean, Bitcoin has just gone up like a laser shot. And there's no other way. If one wants to make an analogy, the closest thing that you can compare Bitcoin to and other cryptocurrencies would be the dot-com era. And I think it's a telling sign that at 8 years into a U.S. stock market run, you now have cryptocurrencies going off like gangbusters. It does feel a little funny, doesn't it? I mean, I'm not one of these people that's going to sit around and make trading decisions off this, but I remember in the 90s and I remember in the mid 2000s thinking, wow, too many people with no clue are talking about how much money they're making. And it's usually a canary in the coal mine for something. I don't know what that something is. I can't tell you when that something will happen, but it's usually a canary in the coal mine for something.
I think with this mania going on, probably reminds me of almost like the tulip mania we read about, or the South Sea bubble. It just gets so wild so fast. And I think the outcome of the Bitcoin, which now they think they've all found the holy grail, you simply buy Bitcoin and you're a millionaire. Simple. So I think the long-term effect, though, for everybody.
But some people are.
Yes. Oh, yeah.
And that's the part that confuses the masses, because plenty of people are Bitcoin millionaires, and now everybody else wants it too.
Yeah, I think what everyone listening to this that's actually in Bitcoin right now, they need to understand, just like you said, with the internet bubble, the tulip mania, the South Sea bubble, there will be people that take their profits and have a signal for taking their profits, locking in their money, and changing their lives. And then there'll be others that just think it can never go down. And the people that think it can never go down could walk away with nothing, or if they're on margin, actually ruin themselves. So I think the exit strategy, if you're in it right now, needs to be quantified.
If you're in Bitcoin right now and you don't have an uncle point, you'll never get out with your profits. If you don't have an uncle point right now and you're just going to roll the dice, you will not escape with those profits. And you know what? A ton of people just heard me say that and just said, I'm a jerk, I'm an idiot, I don't know what I'm talking about.
Oh, absolutely. I think that's going to be the next success. I think they need to look at look at Apple. Apple was $200 a share in 2008. Beginning of 2008, Apple was $200 a share. It was going to go on to be worth, 600, 700, 800, even with the splits. And it would be the greatest company in this generation. It would make a fortune. It would have a whole new platform. It would dominate the industry. And that was true, but it went from 200 down to 70 before it went on to go up to 600, 700. So if people did not have an exit strategy, which I did, and I did get out of it, didn't make it, didn't get their money out. It could have actually blown up if they were using options or margin.
You see a lot of different things. Your sources are wide and varied. I appreciate you for doing all that work. And like I said, if somebody pays attention to your Twitter feed, they can see it all on a daily basis. How much have you grown your Twitter feed from? I mean, it's amazing. As I said at the top of the show, you're like over 70,000. I mean, that's a significant number.
Yeah, I think it was 72,400 this morning. I think in 2014 I was about at 15,000.
Wow.
So it has done well, and I'm just trying to use it as a new form of communication and platform, and I enjoy using that. So try to help my followers every day.
Do you have a feel for the international scope of it?
Yeah, I have internationally, we do really well with even some of our books and stuff in India. Google India is one of our biggest portals that people find me at, and tons of Indian followers and Canadians and British. It's really odd because when I tweet things, I have to think about making it worldwide, not just U.S. based, because my following, I think half of it's international.
Oh my gosh. Well, it just seems like I stumbled into the appropriate bringing this back to the Asian meetup. 50% of my followers are outside the U.S. I didn't know that piece of information before. It seems like you fell right into my trap, Steve. That's great. Yeah, it's amazing watching you on Facebook in Vietnam. Well, I'm in the States today, actually.
Yeah, Virginia.
I'll head back here in the middle of the summer. But I truly, I'm gonna start. Maybe I'll have to start putting these like Twitter requests out there in the Burns sphere and get people worked up and start demanding this personal appearance. I was supposed to get together. I haven't had a chance to. I was supposed to get together with Larry Tintorelli, but just schedule wise, it's been difficult for me to get to right now. But maybe that would make the thing as I get both of you guys to get on a plane and come to Asia.
That would be an event.
Well, listen, hey, Steve, where can we send people? Hey, by the way, you are like a man who's got at least one book a year, perhaps more. Where are you right now? What have you got coming out for traders here in the not too distant future?
See, I'm trying to release which it's in Kindle. I'm waiting on Amazon right now. It's QQQ, the ETF moving average, 7 moving average systems that you could have traded through the boom and bust cycle of the NASDAQ 5000. So it's about 17 years of back testing and showing the results of different moving average systems, and it should be live in Kindle probably the next 24 hours. And my last one was how to beat buy and hold.
What's your platform of choice these days, Steve, for the testing that you just mentioned?
I'm using ETF Replay. It's actually a very user-friendly web-based system that you can test moving averages and portfolios and different things on. Very simple web-based. It's really user-friendly for anybody.
Cool. Hey, where also, Steve, the best place they can obviously find you all over Amazon? Where is the best website we can send people to check you out and to stay in touch? Actually, I might mention the website and your Twitter feed since we've talked about the Twitter so much.
Yeah, my website is New Trader U, like just the letter U, newtraderu.com. Twitter is S Joseph Burns on Twitter.
Okay, Steve, I'm going to go ahead and start setting aside the dining room for this meetup. Don't laugh. I now, because I can, listen, I detect in your voice from many, 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 many of my American friends, and only a few have made the Asian journey. So you're not alone. So I'm not picking on you too hard. But I can detect that hesitancy of like, oh my gosh, I think this is the part where I would have to admit that I think Coveil is crazy, and I really. But I'm going to work on this now. This has now become my plan. I'm going to put together some type of a meetup.
All right.
But Steve, listen, have a good one, and we will catch up in the not too distant future.
All right. Great talking to you, Mike. Thank you.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@coveil.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.